I feel like my internet is going to be brutal throughout this whole thing, but we'll see how it goes. Happy Friday. How is
Happy
it
Friday.
going?
It's going. A
It sure
lot
is.
of news, a lot of. It feels like we need a full episode today, not just a condensed. But we're going to do condensed. We're going to do the best we can. But as a introduction, in case it's been a while for some of you guys, or you're just tuning in, we're going to be covering a lot of the breaking news that came out over the last few days, really since we did our last stream on Monday. We're going to be talking about is this rotation, what's happening in the SaaS space, what's also happening in fintech space as well. We're going to talk about inflation reads, macro reads, and of course a sell-off. I do want to talk about some on the Robinhood. Tevis made a play today, and we need to talk about that related to SaaS, and of course what's happening in the energy markets. And if there's time, we can poke fun at Iron. I guess it's always a good time, right?
That's why I came on the show today, just to poke fun of Iron. But yeah, we can start. Let's start with the macro, and
Yeah.
then eventually I want to talk about the SaaS rotation and everything else.
Yeah, and as always, guys, ask your questions in the comments. We do try to interact with those. If they're related to the topics at hand, we'll try to work those in. If not, we will reserve a large chunk of today's time for the Q&A period. As always, we're going to shoot straight with you. So if we don't know something, we will say we don't know rather than just make something up. So thanks here for being with us. So macro, where do you want to begin on that?
I mean, I see the U.S. bombed the shit out of Iran again as soon as the markets closed. So deja
Yeah.
vu. Is this last week or the week before or the week before or the week before? I don't know.
Yeah. It's crazy because, I mean, like, so people were questioning on whether or not the Hormuz deal would hold. The market seems like it's ready to move on from it. It has seemed like that for in the past when things were a lot more tenuous. You have a post like this today, which just kind of sums up things from usual wells. If you can throw that up there, which says breaking the U.S., Israel, and Lebanon signed a framework agreement allowing the Israel to maintain a security zone in Lebanon with the IDF retaining operational freedom. That sounds good. What happened like an hour ago is Iran allegedly attacked a container ship in the Strait of Hormuz, and the United States responded in kind. As a result, things are hanging again by a thread. So, oh my goodness.
Yeah.
Yeah, I mean, like it's not a full-on scale, but Iran has said that they will retaliate. We've seen how these things tend to go, and Middle East deals they seem to not last very long. So, uh, yeah, art of the deal, I guess.
Thank you, Jared,
Now,
for becoming a member. Sorry, go
how
ahead.
does this? It's probably no surprise, but how does this actually impact the macro? A lot of it is just tied to inflation. We had, of course, an inflation read this week. I believe it was yesterday, and it doesn't look pretty. It just doesn't. But the question is really how transitory this is. And so let's take a look at how these rates moved around. We can see rate probabilities. Let's do through the end of the year since I think that's a better read here. Current rate is 350 to 375. Now, as a reminder for people, this is what people were expecting going in was 2 rate cuts. So we'd be at 300 to 325 instead. Pretty much everybody and their mother, even conservative SoFi, were expecting 2 rate cuts. Well, right now, 21% are optimistic that we just have no rate cuts and no rate hikes. They're in a minority versus 41% now say 1 rate hike, 27.9% say 2. And let's not talk about these guys because that's really depressing. You can see how much it's moved around. Of course, depending on how things shape up in Hormuz, if we see, I don't think that we'll see this, but if we see like active warfare happening like by Monday, yeah, this is going to be ramping a lot higher. A lot of it relates to energy costs, and of course, a lot of the bottleneck supplies there in the Strait of Hormuz. It's not all energy, but a lot of it is, and that's a meaningful driver. So, what do you think as far as what we're actually going to get versus what this chart says, Tevis?
I mean, it's interesting, man, because the markets wanted the other Kevin, what was his name, Hackett or something like that, and he was more dovish, and we sold off quite a bit when we got worse because we were worried that he was going to be more hawkish. and Trump assured the markets that, like, I mean, if it was up to Trump, we'd have like, 3 rate cuts already. But it doesn't work like that, right? And I think you're set up for an interesting friction point towards the coming months, right? The July meeting is going to be a pretty big indicator here of what are we going to get. I think that Warsh is going to try to maintain for as long as possible, and then yeah, there is a rate hike on the table, but I think like I'm perpetually a little bit more optimistic than many out there in the market. So I would say we have nothing for a while. Definitely not a hike in the July meeting. I hope not. But I mean, if this war escalates and it keeps on going, like oil goes up, inflation's still pretty high. I wouldn't be surprised if we get a hike. If we do get a hike, I don't even know what that does to the rally. I genuinely like the sell-off that we're getting this week, at least the rotation that we're getting this week, I think is in part on the back of like the commentary that we got at the FOMC recently, and on these probabilities changing over the past couple of weeks around what is the Fed going to do, right? If we actually go forward with it, and well, it's not going to be a pretty picture. Let's put it that way.
Yeah, for sure. And that's, everybody's breath might be held through the weekend to see how this shapes up. But we can see like early on, especially as things became more well-known, we can see what's happening with oil prices. That's a huge driver of what's been occurring. Actually, I think I can just full size it here. Yeah, perfect. So oil, this is WTI. So Brent crude's a little bit different, but similar trajectory. Peaked here on April 7th at $108 a barrel, which is just, it's crushing. It's crippling for, some of the smaller economies, but even some place like in the United States, which, is the largest producer of oil in the world, we still felt the effects of this. And we're seeing that now with the inflation rates. It's fallen all the way to 70 a barrel, which you can look at this, and let's actually zoom out a little bit so we can see it's not abnormal for it to be around 70 a barrel like what we've had recently under Trump. There's a lot of factors for it. Has actually been relatively cheap, but 70 is not an unhealthy spot. I mean, we were there for a long time. We can zoom out over the last 10 years. 70 is fine. The market can do just fine. And if it stays down this, which again, a lot of it does depend on what's happening with Hormuz, I think a lot of the inflation will come down. Now, there is other inflation that's happening. Now, you might say I'm talking about commodities. Well, there is some in natural gas, and there is some in some of these others as well. But the other read that we got this week too, Tevis, on inflation was with memory costs. Did you see the news with Apple?
Yeah, I saw the news with Apple. I also saw the news with Amazon. That they're raising prices as well. I don't know if you saw that, but yeah. Let's talk about the Apple news.
Yeah, let me pull it up so I don't get things wrong. Man, I posted a lot over the last couple
Apple
days.
lost like what, $200 billion or something ridiculous on the back of just raising prices. It's a crazy time to be alive, man.
Yeah, they were down. It's about 6%, and usually you don't see a move out of Apple that much unless you see like the Nasdaq and other mega cap stocks just tanking. So I'm not finding the post for whatever reason, but oh wait, yeah, here it is. Except yeah, that's just a price chart. So regardless, Apple basically came out and they cited that there's an extreme hike in their memory costs. A lot of people are feeling it. It should be no great surprise. We just had, of course, Micron, which reported just a ridiculous earnings. Like everybody was expecting a beat, but it was a trounce. And of course, the stock initially sold off. But that's algos being algos, people taking profits. It's not that abnormal. But yeah, the more interesting was, of course, Apple raising prices and the market. Why do you think the market like sold it off that much? I have my thoughts, but
yeah, I mean, I'm not sure. Normally, when you get price hikes, you get the stock rallying because they're going to make more money and margins and whatnot. I don't know why the market would have sold Apple like that heavily, because it was a pretty big drop on the fact that they raised, but it was pretty big raises too, Roy. Like everything was raised across the board, like 20-25% on average. I was shocked by that, right? And I mean, I can speculate. Like Apple, you don't really have a lot of innovation, and the only sort of innovation you have is in their hardware and the quality of their chips and the fact that they're all doing it vertically integrated. But if the underlying, you know, raw materials cost goes up, the memory cost goes up, then somewhat out of their control. This is all good for Micron, by the way, with who reported earnings. But
yeah,
let's
Micron, Hynix, yeah. So I think that certainly that's a factor, and when you see this big of a hike, you're probably going to improve your margins versus where they were. I don't know, but their overall revenue is probably going to go down. Apple products are already expensive. This doesn't mean people will not purchase them. They absolutely will. Apple is, and Apple fans, I think you're one. It's a cult. So, but they're good products. Like, don't get me wrong. So I don't think this will stop them much, but it is a little bit of a headwind. But I think the bigger thing is if we look at Apple here and just in terms of their financials, a couple of things going on with them. So one is if we look at revenue, let's look at it at a quarterly standpoint as well. It has accelerated some, so they're actually growing at a healthy rate versus where they were, even just 4 months ago. So 16.6%, very, very nice as far as revenue. This will actually help as far as with some of the revenue growth there, I think overall. But if we look at the actual ratios, that's where if you look at Apple, something that's growing, mid double digits, mid-teens, it's pretty expensive in terms of current price to earnings, and we can also look at forward valuation, forward price to earnings as well. Let's do this here a little bit cleaner, and we can let's remove the revenue and revenue percent change. Okay. So this is not cheap. Now we can zoom further out, and I think we probably should for Apple, because there are times when it has traded higher, but not many times. And if you look at most of these times when they traded a lot higher, it was either when a massive flight to safety was kind of occurring, or their revenue was accelerating dramatically. These are not cheap prices when you're looking at price to earnings or forward price earnings, that are basically in the 30s. So compare that with the rest of the Mag 7, and really only Tesla is more expensive, and ridiculously so, by the way. So I think that a big part of that drawdown, you're not going to see Apple trade at fair prices, I don't believe. It's always going to be seen as that flight to safety, and there's people that are conservative that want to invest in something like an Apple, and they're more adverse to something like a Meta or Nvidia. But if it wasn't trading at such an expensive premium, I don't think we would have seen that big of a drop. So that's all that I think it was.
Yeah, I mean, Apple hit all-time highs like not too long ago, right? And they're selling off from there. So I mean, there is a case to be made from a technical perspective as well that like, okay, well, this is very much in line with many names that hit all-time highs. On the other hand, I think this is a really good point that this user brought up. They sold off because they raised to protect margins, not to expand margins. So the narrative here, I think, is important as well for Apple. But I'm not so excited about Apple. I don't know, Roy, if you saw the news that like Tim Cook was exploring Chinese partners for like essentially replacing Nvidia in a couple years.
I didn't see that. No.
Yeah, I mean, like I think the narrative is based on this sell-off that we're seeing this week, that people are asking whether the AI trade is hitting a local top or has hit a local top, or this rotation is going to happen. And they're asking themselves, if you're a hyperscaler, like how long are you going to be paying the Nvidia tax, right? And we've talked about this in the past as well, right? Like Nvidia has held these hyperscalers hostage to some degree because they're the only game in town from a hardware perspective, but everybody will try to vertically integrate or build their own thing in-house or try to avoid, paying such high markups once that big supply constraint alleviates, right? Amazon is trying to solve it through Tradium. Apple, is trying to find other OEMs. Like there's a partnership with, I saw OpenAI partnering with Broadcom. I don't know if you saw that, Roy, this week.
I did.
So there's like, there's other pieces here. I also want to play you this CNBC clip that sort of made the rounds around AI demand potentially falling, and whether like SpaceX marked a top in the market, or a local top in the market from a sentiment perspective. And right now, like, hey, it's getting a little bit frothy out there, and people are taking profits because they don't necessarily know what's going to happen. On one hand, you have rate hikes being on the table that they weren't on the table, a month or 2 months ago, right? You have all of this uncertainty around AI demand. Like, thank God that Micron crushed it and is proving out that memory is going to be supply constrained for much longer. Because if that wasn't the case, oh boy, we would have seen a much bigger sell off. And even still,
Yeah.
Micron was up 20%, which is absolutely staggering. Nebius was up like 6% in pre-market, and it finished the day red. And so that just points out to me that there's such a profit-taking event right now due to the uncertainty, because we're seeing so many more of these articles out there around the AI narrative changing. And if we do get like hyperscalers reducing capex, or we get more of these, then you're just going to continue to see that rotation. I mean, I don't think the AI trade is dead. I just think we've hit maybe a local top for now, and we just need a breather, and we need more data points. And I think by the time the next earnings come around, then that's a time where we can reassess that trade.
Yeah, and like to your point, if you could throw this up here, this is the Amazon raising GPU instances, and so they a lot of charts, a lot of figures, a lot of massive changes, a 20% increase as well. We can see, of course, this announcement as well for the block rate, and this is not well. Let me just start here. Why is Amazon raising their prices, or what does this tell you about what's happening in the space, Tevis?
I mean, because they can, right?
Exactly. If the demand was not there, even if they wanted to, even if they're like, hey, we're being squeezed because of memory, they would not be raising prices. The demand is absolutely just relentless, and as a result, they're able to do this. And we're seeing this again. I think maybe we went over this on Monday. Well, no, actually, we wouldn't have. This was Hameen that just, or Jamin Ball. I always say Hameen. Sorry. Noting the deals with SpaceX, and specifically, there was a new one with Reflection that came out a little over a week ago. And what's interesting is these are for, there's some assumptions here, but over $10 an hour for Blackwells.
Mm-hmm.
That's really kind of crazy. And we can look at, of course, OpenAI. They're talking about pricing for the new models. A lot was said about the GLM 5.2. More on the training costs and the actual efficiency of that model. There's a lot of back and forth on this, and there's some uncertainty here. But yeah, this very healthy. So a crazy amount of demand. People are raising prices, not just because they're desperate, because memory costs are going way up as far as these data centers, but instead they're like, hey, we're able to raise prices, therefore we are. So like, the AI trade looks to me, and I think Micron is the first read of many that are going to come this quarter that are very much intact. And as we saw last quarter, there was a little bit of chops, but that was macro stuff too. But I think that company after company has a report. TSMC is going to come fairly soon, and then we're going to hit the hyperscalers. We're going to hit some of the specialized neo clouds and the CoreWeaves of the world. They're all going to tell pretty much the same story, that the demand is relentless. That yes, there are some challenges and some things to navigate, but man, when the demand is insatiable like this and growing and probably even still underappreciated, there's a lot of upside still left. It's the companies are not led by idiots that are just like, hey, let's spend a lot of money on CapEx and not see the ROI. They're building because they have to, because the demand is so ridiculous. They want to capture some of that.
Yeah, look, I think demand is going to remain robust for 20. Like, I think a lot of these sell-offs, Roy, or the jitters, is not things that will materialize in 26. It's 27 and beyond, and it's across different layers of that stack, right? Is it an inference? Is it in memory? Is it in photonics? Is it like, where exactly are the big bottlenecks? I kind of want to play this clip for you. I don't know if you've seen it or not, but I want to play it, and I want to get your reactions. It's a 1-minute clip. Let me know if you can hear this, okay?
to go public now. The concern is that some of their largest enterprise customers are starting to rein in token spending and overall AI spend. And while that's expected to continue, folks are going to spend on AI. But one person told me what is absolutely hitting a peak, at least according to Darren Kimura. He's the CEO of AI Squared. He says the peak here is using the most expensive models for simpler tasks within organizations. As he put it, employees don't need these powerful models on the market to write emails. So the pressure is coming from all sides here. You have big tech as part of this. Venture capital analyst Harrison Rolfe over at PitchBook told me big tech is actually the biggest threat to OpenAI and Anthropic. He described it as the ability to, quote, stiff arm these companies on price.
I'm just going to pause right here. Look at these prices, man. Look at DeepSeek, 87 cents all the way to Fable, which is $50 per million tokens output. Let's play the rest of this. But this is like pretty interesting how like the newer models are so expensive. But let's play the rest of this.
Got Microsoft, Google, Amazon, all offering cheaper models while also helping their enterprise clients route to some of the less expensive options out there. Executives I've been talking to over at Anthropic and OpenAI are very much aware of this pricing pressure when you talk to them. They're thinking more about how to adjust to this current backdrop. I spoke to Diane Penn at Anthropic recently. She told me she is hearing about this price sensitivity from clients. They are now focused more on ROI. They're trying to adjust here. The same thing from OpenAI executives. They are also sprinting after that enterprise customer as well. CEOs we have been talking to say they are increasingly switching to the cheaper models. The IPO window, guys, might be right now. And there is, from what we're hearing, a push to go public before this AI premium fades. And then they start to face even more of a squeeze on pricing. No comment from the companies, guys, on this story. Back to you.
Yeah, I mean, like, I think we're going to see a lot more models that have that range of like the trade-off between just being able to brute force and do some crazy things in a short amount of time versus having a model where it's like, hey, let's be lean and efficient. And there's room for both in any ecosystem. Like there is for almost every single product. Like even if you're looking at like hardware, like smartphones, there isn't a like one size fits all. There are some that want a super premium, super efficient phone, and they're able to afford it and buy it. There's others that are like, I want the free one that I can get, or what's the cheapest one that'll just make and do the basic things. You don't need to overpay for that. And so these models will come out like that. Now, I don't think that the LLMs are dead in the water or anything like that. I think it's a weird take from her as far as hyperscalers being able to stiff arm. We saw, I don't know if you saw this, but OpenAI actually came out today, I think it was today, with a response, June 26th. On the next generation models that they've launched. And so they talk about a lot of the benchmarks and capabilities. And in essence, just in a nutshell, Soul is just like you think of the size of the gravity well, the not the equivalent of Fable, but a Fable-like LLM, which they're like, hey, this is GPT 5.6. Soul is like, you need something done and it's really fancy and you just need to get it done and built. You go with Soul. If you're like, let's be in the Goldilocks zone, which is where Earth is actually, then let's do something that's a little more efficient, but also very, very powerful. And then there's sometimes where it's like, hey, Luna, let's focus on efficiency. Maybe not as efficient as like the DeepSeeks of the world, but it's nice to have this adaptability. And I think it's the right approach as far as what they're trying to do. It's not just say, hey, let's have the best model, period. Who cares what it costs? At this point, token maxing is kind of out of favor. A lot of companies are pushing back against it. So, and of course, Anthropic is doing similar things as well. So, but that's a healthy space and healthy thing for the market. You and I are not investing in OpenAI and Anthropic, at least not yet, not until maybe Anthropic becomes public. And what this means is the more variegated models there are for specialization, like the harmonics of the world that are focused on mathematics, versus like the light, the regular, and then the super heavy duty models, that's a good thing because it helps that demand be resilient and helps people have the right kind of product that fits their needs. So I think we're just fine. I don't see much cause for concern here personally.
Yeah, look, let me give you very quickly sort of my take to that clip. It's simply the fact that we have an input, which is the incredibly high capex that these hyperscalers are putting into LLMs, with the overarching linchpin assumption that ROI is on the other side of that bet, right? If in fact we find that the ROI is not on the other side of that bet, then we're in for some rocky times ahead, because you're going to get huge sell-offs, right? Like if you just look at like the free cash flow of these companies relative to the capex that they're having, relative to like the stock price of how it's been trading, like the market is not loving the fact that these companies are betting so big on AI right now, right? And by having these newer models be so incredibly expensive, Roy, on a per request basis, let's say, the ROI equation is not as clear cut as it might be on like, ChatGPT 3. If I use 4.6 or if I use 4.8 on Opus or Fable, it's not the same as like me using the version from 2 years ago. And like she said in the clip, like normal enterprise customers, like the people in these white collar jobs, like, dude, for me, like I pay a subscription to Claude and I have way fewer queries today than I did 3 months ago. And I was just going like exploring a lot and using it for coding and design and just like learning. And because I have fewer requests, I'm like, I don't give a shit. Like, I'll just go Opus 4.8 for everything. Like, hey, help me craft this email, Opus 4.8. Hey, what's a nice restaurant near me? Opus 4.8. You know what I'm saying? So it's just like, I don't care because it's a one size fits all subscription price for me. And so if you think about like these companies as well, it's like they're not using Sonnet for some of these basic requests where they should be. Like it would just do an equally good job for a fraction of the tokens. They're using the highest version. And as you get more sophisticated versions over time, and people are using them for the same basic stuff, like as a personal assistant, like, hey, book my meeting or whatever, then the cost per the ROI is going to be skewed. That dynamic is going to be skewed, right? Sonnet can very easily fix an email for me and make it sound like a human. So can Fable. But I'm going to use Fable because like I don't care. Like I'll use a bazooka when I need to use like a pocket knife. Like I don't care. And I think most people fall in that bucket.
Token Max or Tevis, you heard it here. So that's your new nickname.
Many people are like that because they have no idea of like the trade-offs or the repercussions, And so I don't know what that looks like, Roy, on like a macro level when I'm Meta or Amazon or whomever, and I'm spending hundreds of billions of capex and I'm trying to find the efficiency. It's like, first of all, is it going to be more efficient for me to, like, we're talking about this, because I'm actually like in the tech sector and I'm talking about, okay, what does it look like for me to completely change my workflow to make it all AI first? We want to do prototype first as opposed to Figma screens, right? Like, okay, what does that world look like when it takes me more time to prompt engineer what I have in my head versus for me as a designer to just go to Figma and just whip up a low fidelity mockup? It's not a one size fits all for every request. Like there are some requests where it's just like, dude, I'll just, I'd rather just type in Google, like, hey, who's playing FIFA tonight versus type it into Claude and have it like, think and search and do all this thing. So like my point is it's not a Swiss Army knife that does everything. There are specific use cases where it will unlock efficiency. I just don't know that people have that maturity to use it in that way just yet. And I think that is what's going to hurt a lot of these companies because they have this like blanket mandate to use AI, but not necessarily a good education around what are the specific use cases, where it excels and where it actually makes you slower. It's like an assumption, Roy, that like by default, if I use AI, I'll be smarter, I'll be more efficient. Like, dude, I'm personally finding that that's not the case.
That's a great and reasonable take. I do want to thank Crypto, if you can throw it up. Kryptonite Good 99 for the $10 donation. He said, what is the latest on Claude re-releasing Fable 5 model? There's actually been some really interesting updates. So thank you for the donation. Thank you for the question as well. Earlier in the week, and I couldn't find the post, I looked for it real quick. There was a lot of talk that Anthropic, which of course owns Claude and owns Fable model, was really trying to work on KYC, so know your customer, basically as a way to get an agreement with the United States government that they are using the KYC to basically validate consumers that are using the model, making sure that it's not falling into like enemy or antagonist hands, just because. And they're also in a weird spot where they had flown out, members of their team to go to Washington D.C. and basically argue, which is weird, that their Fable model was not as scary and not as powerful as it seemed. That's a weird place to be, because usually Anthropic has done the reverse, but they're in a weird space right now. So we did get some news that's fairly breaking. It came out. I don't know if you've seen this yet or not. Right here, there is rumors of an agreement between Anthropic and the United States. There's a lot that's written towards that, but basically that there's been progress made towards a deal that would basically lift some of these curbs and restrictions. I think that, again, that probably KYC is going to be a part of that they'll have to validate and only be able to sell to a certain number of people. But we've seen that playbook before. And on the other end of things, too, we saw today, which I don't have a Bloomberg subscription. I should probably get on that. But Anthropic sued a customer, not Anthropic themselves, but a customer sued the United States government over the loss of Fable AI access. So there's a lot of pressure to get the model open back up, especially to those that are using it for non-nefarious means. And I think that we're going to see the reality of that. I don't want to be in a space, honestly, Tevis, where the United States government determines who a company can or cannot sell to. We do see that, sadly, with NVIDIA. It's not great for the company. It's not great for the ecosystem. But I understand why there's some concern with it, just as powerful as some of these models are. But we are heading in a better direction there.
Yeah, look, man, like even with the news today, right? OpenAI 5.6 Sol, like it beats Mythos in terms of capacity, and it's 1/3 the price, and it's going to be a limited release as the government reviews it. And it's just like, dude, you're getting into this place where we're not moving as fast as, like, you think China's thinking about this shit? Like, genuinely, do you think China's being like, oh yeah, let's consider the governance of our AI models because we now have a very powerful. And they're like, no, man, like just release it, right? They're trying to purely win the race at all costs. And I think that, the US was like that a couple of years ago, but ever since, and you know what, who I blame? I blame fucking Dario, bro, because Dario was like, oh, this is too powerful for us to release. Yeah. This is like dangerous. And it's like, yeah, dude, the government called your bluff. And now they're adding this whole governance layer. And whether you're Anthropic, whether you're OpenAI, or whomever else in between, any new model that you release is now subject to government approval because it's going to be deemed safe or unsafe by the... Dude, do you know how fucking slow the government moves, Roy? Like, do you really want to have that, in a global race for AI dominance, to have the government as the referee? Like, dude...
No.
Sure. So anyways, that's like my frustration around that. But the certified AI dev, very spot on name, says, in my organization, people burn tokens on open code by constantly talking on the same session with balloon context windows, which leads to high token inputs and less output. I do the exact same thing. And I would like to consider myself a little bit more aware of how the actual models work, and like I just don't care. It's not like I don't know. I just don't care, right?
Yeah.
And so I don't know, man. Maybe I'm just being a jerk, because this is like one of those conversations where it's like, oh yeah, this is good for an environment. You should drive a Prius. And I'm like, no, I want to drive an Escalade. Like, screw that. So.
Yeah, and there's a lot of products, like both from the LLM companies and also from others like Palantir. I think we've talked about this before, but they released a product called Evolve, which is all about pushing back against token maxing, making things more efficient as well. It's a needed, and they're not like the only solution. Like, I'm just trying to say that there's a lot. Like, this will get solved and resolved. Some of it also is at the company level, where the Tevises of the world that are like super heavy duty token maxing, like to do 1 million tokens to send a single email. Like, hey, bro, you can't do that. So a lot of solutions out there will get past the hump. there are things to figure out. But it's a market. Actually, honestly, companies are in a much healthier space now because they're not any longer boasting about how much money they're burning from token maxing, whether it's an official measurement or it's just the unofficial dashboards. We've seen that pushed away.
I love this comment.
That's why you're the token maxer. I see. You're making sure that the demand is there. You're like, hey, let's do 50 million tokens for the single email. Long nebulous.
Well, Roy, I don't know if you saw my latest purchase today.
I did.
Maybe we want to talk about that, but I think we're going to be. I mean, we've been talking about a potential rotation now for a while, and I want to position myself, to take advantage of that. Do you want to talk about that for just a second?
Can we hit one more thing before we do? I want to make fun of Iron.
Oh God, yes, yes.
So
what's that meme with like the two dragons, and then one of the dragons is like completely different? That's Iron. Go ahead.
Yeah. So yesterday, news released from Iron about a major partnership, and you're like, hey, that's great for Iron shareholders. They've been waiting on that next contract. Well, it's Golden State Warriors, and you might say, well, Golden State Warriors don't use a lot of inference, do they? The answer is no. No, they do not. Instead, it's more than just a jersey patch deal. That's a bit of a misnomer. That was like the initial read on a lot of things. It's a sponsorship that's very familiar. Rakuten, who is a business to consumer out of Japan that was trying to break into the U.S. market, I believe back in 2022. No, that's when they re-upped. They did a similar sponsorship agreement with Golden State Warriors. They actually removed the jersey patch, part of their sponsorship, a week ago. So we knew that somebody would step into that. But this specifically was an announcement that kind of shook a lot of people, even some noted bulls with Iron. Now there's a lot that are like, there's always people like in stocks that are like, hey, no matter what they do, like it's I'm going to be bullish, I'm going to be excited. I'd rather have a more moderate view. So I initially read this as like, well, maybe if it was like $20 million, which would still be pretty expensive, but Golden State's going to be an expensive contract. More on the jersey patch side, maybe even 12 million, although I think it's probably north of that. Maybe there's some merit here. This is 50 million per year. And there's a lot of branding that's happening. Of course, it's beyond just a jersey patch as well. Now, the argument for and in favor goes something like, hey, they can use this because they don't really have much of an advertising budget in place of that, in trying to use, of course, like the tickets at box offices to have informal conversations, and also to get their name out because they've done this pivot away from what their business traditionally was, so that they can perhaps have easier inroads in discussing with companies and selling their capacity, which is bullish that they have capacity. It's bearish that they haven't had any contracts with. But when you look at 50 billion and what they could get instead, I mean, they could have brought in an incredible amount of engineering talent for that. As they're trying to build out their engineering cloud, they're well behind where Nebius is. They made some inroads as far as a Kubernetes push on their end previously with an acquisition. They could have, if they're like, hey, selling is our problem and not our strong point, for 50 million, you could get quite a sales team. That's 50 million per year, Tevis.
Well, Roy, it's not just that, man. It's the fact that, let me share my screen here for a second. Their CEO literally on this earnings call, this is a direct quote, said, you don't need a sales team in this market, particularly when you've got NVIDIA. And then a week later, they acquired a creative and media agency. And then 2 weeks later, a sales deal with Golden State. This is an interesting post from Alexander saying, I completely lost it here and sold out, spending another 20 million on sports marketing funded by the 6 billion shareholder ATM. In addition to big spending abroad in sports deals is crazy. If we just think from a first principles perspective, blah, 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 the CEO said you don't need a sales team, and yet they're doing this. They're trying to improve branding. And look, I kind of agree with this take, quite frankly, because like, okay, in isolation, I'd be like, all right, not a problem. Their marketing, the marketing is going to pay ROI and all is good in the world. But when you consider that they've been diluting the absolute living crap out of all their shareholders, and that everybody is like struggling to put every spare dollar they have towards more build out because every single, gigawatt is being overbooked. Really, guys? Like this is where you find this is, what this reminded me of, Roy? It reminded me of Clean Spark. Was it Clean Spark's team where they're like buying a jet or what? Was it that
Oh, yeah.
team?
Yeah.
And it's just like, guys, this is stupid. Like, why would you do this?
It like on these deals, like I haven't posted on this. I just was like flabbergasted. I'm doing a data center weekly like update type of thing, and wanted to better understand it. So like out of Jersey patch deals, which initially that's what the read was. It's more than just a Jersey patch deal. Most of the companies that you see that do that are usually financial companies. Not all. There's some exceptions, and almost all. I think all but 4 are business to consumer. And the reason why it makes sense for, well, not quite the same, but like for SoFi, for instance, to buy naming rights of a massive stadium is with financial products especially, but with products in general, rarely will you want to do business as a consumer, as an individual, financially, like move your money, open up a bank with a company you've never heard of. You need to have some sort of name recognition. It's an important measure. They're not selling GPUs, rentals to individual consumers, though. And there are some benefits. Like, I see some comments here about like them owning a box suite and things like that. Like, there will be some inroads made probably in some of those conversations. But what I'm saying is like 50 million a year is egregious, and there's so much better ways to have spent that money than to do something like this. Now, the one thing I will say is, well, okay, like one other thing too is the CEO originally was like, hey, we don't really need a marketing team. I kind of agree with that. Obviously they do. There's something wrong. And part of what's wrong with IREN is, they're a little bit further down the line to actually get the GPUs than with Nebius and with CoreWeave as well, who's just like first in line, which is amazing. But the other is they have unsold capacity that they've not been able to sell. Now, right now, the moment that they announce a major deal, which probably will happen, I would say like 90% chance that it happens, maybe 95% by the end of the year, it'll be massive. It'll be thesis changing for IREN and very, very accretive, because right now, the cost, we just looked at it, for compute is ridiculous. And so they're selling in the right environment, but they haven't sold yet. And if they don't by the end of the year, I think that, the stock can go substantially lower because people are already wondering why there hasn't been a major partnership. I think that they'll get there, but I'm not sure that this measure right here is how they get there. It looks a little bit silly, and I think that the leadership has made a number of missteps. Good company. If CoreWeave and Nebius didn't exist, I'd probably own IREN, and I wouldn't really have too many concerns, but I'd still be like, hey, this isn't the greatest look. The other thing is, just to use my water, trying to sell water to a guy that is, dehydrated in a desert needing water, is desperate. You don't need a sales team, and you don't need a marketing team. You certainly don't need a Jersey patch and a $50 billion deal to be able to sell that. The demand is so robust right now. Like, what are you doing? I don't get it.
Yeah, it's like if I'm starving for water, they're like, hey, do you care what brand the water is? Like, no, dude, I don't give a shit like what brand the water is. Just give me, like, I'm dying here,
Yeah.
It's just and no, look. You guys are gonna trigger me. This is not the same thing, man.
No.
2 very different products, okay? 2 very different products. And then, like, do you understand how supply constrained this sector is? Like, Nebius is already selling capacity for 2027 in a data center that hasn't been built out yet. They have 4 customers for every, gigawatt. And it's just crazy, man. Like, you don't need any, like, all your money should feasibly go towards build out. Negative dollars should go towards marketing, because you're in a sector that markets itself. And okay, great. This deal is going to close with Golden State, right? Why? Like, these deals don't close like today for tomorrow. Obviously they knew this on the earnings call. Why would you as a CEO come out and say, oh yeah, we don't need a sales team, we don't need marketing? Like, why would you do that, knowing that this is going to happen? And then the backdrop is you've been diluting the absolute crap out of your shareholders for the build out, which is like great. Like, IREN investors can justify that because they're like, hey, look, we're getting diluted right now. It's fine. because we're going to build out the capacity with that money, and we're actually going to see ROI, and the stock is going to appreciate as a result of that. Cool, I can justify that. But then you go ahead and do this. It's just I don't know. It's like a slap in the face, I think.
All right. So with that, let's talk about that rotation then. So we've talked about what's happening in this space. You rotated some money. You bought in one of the sectors. The two places that I'm seeing, maybe it's rotation, maybe it's a relief rally, is of course SaaS. So specifically, if you look at IGV and also fintech itself. So tell us about the move, and then specifically why you targeted those names to us.
Oh, my purchase?
Yeah.
So, okay, let me share my screen. So I did a little bit of shopping today. I bought 300 shares of Amazon, and I bought 600 shares of ServiceNow, which is my first purchase of ServiceNow. And I think like Amazon, I've talked to you guys about quite a bit. I have spreads on Amazon, right? I have my 230s, 280s for 2028. And then I got my shares called away in, I think, 245 or 250. I did it like, I was going to buy it yesterday, but then I was kind of like dragging my feet, and then it rallied up today, and I was like, dude, just pull the trigger. Who cares? And then ServiceNow, I kind of felt bad about buying it today because yesterday was like way cheaper, but then it was back up today, and I was like, okay, you know what? I'm just going to do it, and we're going to go from there. ServiceNow has been something that has been really interesting to me, Roy, because it's been oversold, I think. Like, it got cheap for all the wrong reasons. I mean, Wall Street is scared AI is going to make ServiceNow obsolete. They sold it off. It's down like 60% from their peak. I looked at the actual earnings results. I listened to the call. I saw the Bill McDermott CNBC interview. Like, the actual business is not worse. I mean, their earnings beat and raised the forecast, even though the stock dropped 18% on the back of that news, right? Customers aren't leaving. Like, you had 97% renewal rate every year for 5 straight quarters. You have customers actually spending more money. I think the AI fear is not really fair because ServiceNow is like that entire orchestration layer, or as Bill McDermott says, it's like the control tower that makes AI safe to use inside big companies. And then the agentic use case is also going to help them make more money on AI. Did you know that they're on track to do $1.5 billion a year in AI revenue that they just built in like 2.5 years? That's crazy. Like, the fact that they can do $1.5 billion a year and growing of AI revenue as a SaaS company, that is validation in itself that I don't think this is going to get disrupted. 22% revenue growth. I mean, 16x forward valuation. The CEO is buying a ton of shares himself. $5 billion in buybacks. Like, I was just doing my homework on this company for quite a while, and I was just like, okay, you know what? I just need to pull the trigger on this. And so I bought about $60,000 worth, and we'll see. I don't know. Maybe I'll buy more. Maybe I'll buy some leaps, quite frankly, under $100. It's right now, Roy, I think it's a matter of like, the market is selling this off because they're trading in a bucket. They're not looking at the merits of the individual business. And we've seen this happen multiple times where stocks just get sold off in this way. But I think that as the quarters keep coming and the business is not deteriorating, I mean, the number to watch for me is that 97% renewal rate, because some of these contracts are like, forward, like booked revenue essentially that's not realized. But if you have a lot of these contracts not getting renewed, then obviously that renewal rate is going to fall. So that's one of the key numbers I'm watching for. But if that doesn't fall from like, 96, it's been like 98, 97, 98%. If that doesn't fall, further, I think we're in a good spot. AI revenue obviously expanding. The growth rate is still staying high. Like, I'm really bullish on the prospects because I just think it's been misunderstood right now and sold off unfairly. So yeah, I bought quite a bit, and then I just bought about 60K of Amazon ish today.
Yeah. Yeah, Amazon, I know it's something you're in. ServiceNow is one of those where I said, out of names that I don't own in the SaaS space that are large providers, ServiceNow is probably the one that I'd most like to own, but I wasn't necessarily eager to own it. And there's a few reasons for it, but I don't think what you did was necessarily bad. Like you can see the estimates right here, which you have a lot of analysts. And make sure, by the way, guys, if you're looking at estimates, look at the number of analysts. The quality usually goes up the higher the number of analysts that there are. And of course, there is a large amount of variance in some of these, but with ServiceNow, you really don't have that. This is actually a remarkably tight range versus like if you look at something like Iron or even Nebius, it's all over the place. And the reason why is like what Tevis said, that their renewal rates. And so we can see there's a pretty good forecast. This is mid-range estimates of about $23 billion in terms of revenue versus this year expected to do about 16. That's a pretty good ramp. Now, some of this is actually a lot of this is inorganic, but not all of it. Like Tevis mentioned, the AI is a new arm what they're doing. So if you look at price targets as well, be careful with price targets, but most of them are substantially higher than where actually we're going. And the price it's been a challenge, but I don't think it's bad. You might just be a little early. And the nice thing is what you did was you bought shares instead of like leaps that are like way out of the money or whatever, or writing in deep in the money cash security. Like you didn't do any of that stuff. You're just like, hey, let me buy shares. I don't know how long it's going to take to play out. But I think you'll be on the right side of this. It's just a question of when, I think, more so than if.
Yeah, and I'm also like selling covered call. Like I immediately sold covered calls on it, Roy, for like a month out for I think 140. And it's just like, dude,
selling covered calls? Man.
I know, crazy, right? But it's like, dude, like if I get a 40% rally in a month, cool. I'll sell out of ServiceNow and then take my 40% and just, go into something else. So if you get paid to wait and it's something that I'm doing more research on, like I could see myself building a bigger position into it. Honestly, it's everything that I was reading, like I liked. Obviously, next quarter can come out, the renewal rates can tank, and they could see actual headwinds from AI. But I don't think that's going to be the case, right? Because of how they're positioned and because of the dependence that they have. Like it's so difficult for these large enterprise customers to roll off of ServiceNow. It takes so long to do that. It's such an expensive and lengthy process that you kind of have hooks in these customers, even though they might not be, loving your like same with CRM, by the way, right? Once you go onto Salesforce, and you have all of your data on there, similar with ServiceNow, similar with all of these enterprise SaaS companies. As a large enterprise, like it's a sunk cost for like you need to really have a strong case to move off. It can't just be like, oh, a competitor offered me slightly better pricing, because the integration periods on and off is multiple months, if not multiple years, and it's multiple millions of dollars.
Yeah, I'm very glad though. You mentioned Salesforce. Man, I think that company, like it's not going to zero. It is hard to get rid of. I've not heard people like, I've heard a few complaints, but not much on ServiceNow. Nobody loves Salesforce. Nobody loves their business model. Nobody loves the way that they handle those contracts. Very few people actually like the technology. That's one that I think will be over time disrupted by AI and other competitors. ServiceNow, I think it's less likely to actually occur. So I think out of the two, you picked a winner. Like a pair trade, I wouldn't do it this way, but a pair trade, like if you had to, would be long ServiceNow, short CRM. But reality is it's probably just better to be long in whichever one you think is the winner there. So it makes sense for what you did. Like the one thing that I'll say is a pushback, and maybe you have an idea on this. This is a new position for you, so it's totally fine if you don't. There is some consternation with SaaS that they built their model around seat-based revenue, just because we're seeing a lot of consolidation in the tech space with number of employees. And so when they get to renewals, maybe they stick with ServiceNow, which I think is likely, and CRM, which I think is likely, but there's a little more headwinds there. But they might have a fewer number of seats. So is that much of a concern for you, or not?
I think the entire industry is going to move away from seat-based purely to a more hybrid model, which consists of seats plus usage. And I'm not sure exactly the nitty-gritty of how that will look like, Roy, but with AI, having a strong prevalence, I think most of these companies need to move away from strictly seats, because I'm seeing it in my organization. What used to take 5 seats of us having a team, now we can do in 1 seat or 2 seats, because we have AI that automates away half the work. And so honestly, I think one of the best models from a usage perspective is the data model, right? Like, how much data do I have stored in there? Like, what's the context? And you're going to pay for storing that data in there, because that data is the context that allows the orchestration layer to actually be effective. And it's not necessarily seats, but it's a little bit more robust dynamic pricing that's not as fixed. Now, how do we do that in a contract that's prepay for the next 12 months? I don't necessarily know, but the point is that these companies, in order to maintain pricing power and increase that price over time, I think need to move to a more like data usage model of pricing, as opposed to a pure seat model of pricing.
Throw up certified AI devs comments. I think that those are really good. The last 2 right there.
Yeah, he
all
says
their renewals are
going to be usage based, and now already has 40% plus revenue from usage based revenue. So yeah, that's exactly my point.
I appreciate that comment. I did not realize that. That's really good. But yeah, like Tevis, like you said, is the companies are not idiots, and if they have to pivot over to usage based, they will. It's not that big of a deal. It doesn't mean that they're going to zero, but yeah, I wanted to throw that bear case out there that people have talked about. Although a lot of that has faded, but that was where we were at 3 months ago. All right. Beyond that, just one more thing I wanted to touch on my end. There might be something else that you want to hit on this end too. The other rotation that we've seen, of course, is with fintech and with finance. There's a lot of different reasons for that, but it's been really interesting to see names that are no longer owned, but like PayPal doing incredibly well this week. Shift4 doing very well. The Visa and MasterCards of the world. Pfizer, like these companies have been left for dead. They've been moribund for a long time. We have seen relief rallies in the past, so I want to caution people, like, it may just be a relief rally, but a lot of that is, I think, maybe some of the luster fading from the AI wave. But I also think that when AI starts moving again, I don't think it's a if, but a when. I think some point this quarter, as earnings come out, you might again see these names fade back to where they were. But there are names that I think are breaking out and probably show signs of being able to do that durably. And so one of those, there's been a lot of interesting things like with Robinhood. So Robinhood, of course, came out with a agreement that they actually were doing an offering, a senior convertible notes for $2 billion initially, upsized to $2.2 billion, 0% rates. And I'll need to actually pull up that chart here. I forgot to do that. But they also came out with preliminary monthly numbers. The reason why they did that, I didn't get that initially. It was tied to that the senior convertible note agreement, that they were just like, hey, we're giving this to the people behind the underwriting of this, and so we'll go ahead and release this as well. Well, they gave an update as well based on data through June 25th, and so the implication is that had June 26th through 30th not existed at all, like Robinhood did 0 in volume for those, we'd be looking at an all-time high for options. This is, again, assuming that the last 5 days of the year don't exist. We're looking at an all-time high in equity notional volume. Not as exciting, but it's still very good. Crypto winter is still a thing, but this is a lot healthier than where they've been over the last couple of months, especially with 5 more days there. And then predictions market. This is actually $5.2 billion. Artemis's thing rounded down, and I could have tweaked it, but oh well. But yeah, they there are looking at just a tremendous ramp, and this is not including the Rothera platform. The Rothera platform, it's of course their own platform that they're doing basically to back end all of their event contracts eventually will be on there, which basically either takes a lot of market share or ends up that they are able to save a lot of money that they don't have to share with Kalshi. I think it'll be a both and, but largely it's about market share. But yeah, that puts them in a really good space. And then I love this chart here, especially like for SoFi investors. We understand when there's a lot of dilution that happens, and it's a complicated deal where there's capped calls and different dates and different figures that are thrown out there. And then Robinhood did some of the money that they earned from this also for buybacks immediately. It's like, okay, how dilutive is the dilution? And so this is part of the information that they came out with, but I really like this that they anticipate no net dilution from the transaction until its share price exceeds $303.95, which is a 188% premium on June 22nd, 2026's closing price. So we're looking at, out a few years, currently trading at around $100, a little bit less. I would be perfectly okay, Tevis, if we have a 0.01% dilution and we're trading at a 3x in less than 3 years. Or let's go wild and say 550. We're looking at 0.49%. I know it's a little bit hard to read. Love the graphic. I did message somebody that we know at SoFi and said, hey, copy this next time, please. It's going to help shareholders a lot. But this made the whole thing a lot less scary on my end. I'm like, hey, really very little dilution. By the way, Jack, thank you for your $5 donation. We can't start over, but you can go back. And thanks for being here.
Yeah, and also shout out to Magda. Please let your husband/partner keep listening to us during your road trip. Thank you very much. Ori with an interesting question. I'm going to answer this in our question period when that comes up, because I think that's really a good question. Yeah, I think Robinhood is going to continue to do very well, Roy. And I think fintech in I think fintech in general is at an interesting spot because of it being so rate dependent. Like I'm seeing with SoFi as well. Like if we get increasing rates, and that's going to negatively impact SoFi. Although I mean they've been doing well over the past week. But SoFi right now is like range bound, man. Like they need to break above $20 for them to even have a chance to start climbing higher. That's been like a real kind of laggard in the portfolio, I'd say. That and BMR.
Yeah.
But
boy, I see some BMR questions in the Q&A. Are you ready for Q&A?
We have 30 questions that are already bookmarked, sir.
All right.
Let's start with Ori.
All right.
He says, Tevis, do you see more upside for ServiceNow than for Palantir? Yeah, look, what I would say is ServiceNow is definitely cheaper than Palantir relative to the fundamentals, but Palantir is growing way faster than ServiceNow. And I don't necessarily know which one would have more upside. If I had a magic ball, I would be much richer. But I think both of them at these prices, if you look out 5 years, I think you'd be pretty happy regardless of what you choose. I'm sure Roy would have a different thought there. Roy?
Yeah, I think Palantir easily from here. It's actually getting in the range. It's not cheap yet. It is in my fair value range, and so they're growing 85% year over year right now. Let's look real quick, because you're looking at cheap. Like if you're looking at current multiples, yes, ServiceNow is cheaper. If you look at projected revenues, it is on most. I've not pulled up ServiceNow in a little bit. It might be on all, but are the analyst revenues right? Well, we looked at ServiceNow's projections here. Let's just do it in bar format. Well, actually, no. You can see how wide this funnel gets. So there's a wide range in outcomes between $14 billion that they'd be making in 2028 to 24. That's actually an insane, and it seems like it has gotten wider. Now, if we're looking at actual revenue, let's look real quick here, and let me close. Oh, I'm in estimate still. Okay, let's see financials, revenue, and percent change. I think it'll let me. Yeah. Okay, we'll actually just do it here in one chart. We can go out here. Should we do quarterly? Let's do quarterly. A little easier to see. Okay. So with Palantir, and we got to go out further. My apologies. All right, now we got it. Right now, 85% growth rate. What analysts are projecting is a slowdown. Now, part of that is, as the numbers get bigger, it's harder and harder to beat. But frankly, people already thought that Palantir would be there. So we're seeing a slowdown in terms of the estimates. What's that?
The comps are going to be much more difficult.
Yes. That's what I meant. Thank you. So of 44%, which is still astounding growth. Like that's absolutely great and impressive. Now, what I want to say is I think that this is wrong. Analysts actually have been doing a better and better job with analyst projections on Palantir. I've not done mine yet for next quarter. I'll do that, of course, before earnings. But what I will say is Alex Karp himself gave indications that they are expecting and aiming for 100% year-over-year growth next year. Now, you can aim for it and you can miss, but what I want to say is this guy has a track record of when he says things, they tend to play out exactly like he says, or perhaps even better. The market has doubted him before. Right now, 6 months ago, you could not say this. Right now, the market is very much doubting that this growth is durable. It's very much doubting that they can do anything resembling that growth rate. It is selling off actually quite a bit from this peak. That's actually astounding, to the point where even Burry was covering some of his short position, which I don't think he really profited on too much, at least from the option standpoint, because there is a lot of theta decay there, and a lot of time passed before this big move downward. But regardless, I like where Palantir is right here. I think that this is very attractive, and it wouldn't surprise me that we don't. I don't think that we're going to see like Palantir go back up to its all-time high like anytime soon. It should have never been there. It was, and I was like, hey, nah, I'm going to do the world's slowest DCA. So slow that when I bought more at like 125, I bought more at that moment, and it wasn't even a large buy than I had bought over the last like 9 months. If it gets to $100 a share, that's when I start probably doubling my position in Palantir. I'll have to move some things around to do that. If we go like to $75 a share, it'll still look expensive. I will load up on options at that point. Long-term, conservative strikes, but yeah, this is a company where I think the qualitative gap on Palantir and the moat as well speaks for itself. The revenue growth is ridiculous. And then the big difference, Tevis, is that this is all organic. Now, does that mean that inorganic growth from acquisitions doesn't count? No. But what it means is Palantir has built something that is special, that is durable. The demand for it is higher than ever. And I think that the shares of Palantir will actually not just outperform, but dramatically outperform ServiceNow over the next 5 years. I think it's not even close.
Yeah, I think that's possible. I mean, like the higher growth rate will win out in the end, of course. I think with Palantir, the sell-off is in large part because the market is pricing in the tough comparable periods and the fact that the growth is going to slow down. And if in fact they show that, hey, the growth is not slowing down to the same degree, then, well, you're going to see a real acceleration. But Palantir, dude, I had one of my good friends, he was so bearish on Palantir last year. He's like, oh, it's over. He's much more traditional in that sense, like more conservative in his investments. And he was completely like when it was like 150, 160, 170, 180, he just sold puts on Palantir. And he's just like, I hope I get assigned on those puts.
Oh yeah.
And yeah, like it's getting to that level where even he is just like, he told me, he was like, buy Palantir. I was like, I'm going to buy ServiceNow. And he's like, no, you should buy Palantir instead. I'm like, well, maybe when it falls under 100, I'll definitely, look into selling some puts on Palantir. Not against it, but the drop is noticeable. And I think that paired with the fact that you've had 80%, plus growth rates is making it way more compelling.
Yeah. And it always could be like something happens this quarter, the market tanks Palantir more, even on good earnings. Like we've seen that happen. If so, I'm not going to try to get too cute with trying to time things. I would just buy shares. I wouldn't even write puts at that point if we're looking at substantially lower from here. But yeah, both good companies, both I think solid bets. But yeah, I don't think it's close.
Where am I now? Still in Europe? Yes, I am still in Europe. I don't know how long I'll still be in Europe, but maybe a couple weeks or so more. My birthday is actually coming up next week, Roy. So we can do like a little birthday stream. That could be fun.
That'd be fun.
What made me buy ServiceNow? I sort of explained in a little segment around the 49-minute mark. So just rewind and you can listen to that again. Is Iran doing worse in the World Cup or in their ceasefire? I mean, either way, they're getting bombed. So.
Could we not just settle this on the soccer courts? I mean, like, come on. USA men's team versus we'll do the B team against Iran's team there. The B team didn't do that great last night. So yeah.
How heavy are you going on Palantir if it goes sub 90?
Well, okay. So if we hit 100, Palantir positions probably 10% of my portfolio at that point. Sub 90, I'll have to think about it. Like I'll say like 75. I don't think it gets there, but sub 75, it'll probably be 20% of my portfolio, rivaling Air Test Systems and Robinhood, and I'll probably actually take some out of those names to buy Palantir. So it might actually become the largest holding yet again in my portfolio. It's one of like two names that I don't mind going above a 10% allocation. Don't mind if things run up much further than that. That's fine, but it's a generational company. Now, it's still not cheap here. I think it's fair, and so just be careful. Yeah.
George says $80 is his price. Look, I think if we go to $90, I will start selling at the money cash secured puts a month out. And if I get hit, I get hit. And if I don't get hit, I'll probably collect a lot of premiums for doing that. So that's what I did on Amazon, right? I sold 235s when I was at 235 and it went all the way down to 228. And I was like, like, who cares? Because if I own it at 235 and I collect $7 or $8 of premium for a month out, like, cool, I'll happily own that. Anyways, so that's how I would play it personally, not financial advice. Thoughts on fintech? I mean, I think that the rate situation is going to be the main sensitivity point around fintech in general. So I would say the July Fed meeting is going to be pretty insightful as to how the market will feel about fintech, if we get a rate hike or if we get a continuation of where we are right now. Right?
Yeah, about the same. I think that, probably all these will do pretty well in or by quarter four. Midterm elections, there's some cyclicality and seasonality in there too. Some have ties to crypto names as well. As far as like individually, Jack Dorsey company, like he's not a CEO, so I wouldn't bet on Block. I would not bet against Max Levchin, even though I don't love standalone buy now pay later plays. But if I was to bet on one, it would be Max Levchin's firm. PayPal, they're lost. Sorry, it's cheap. It shouldn't be trading where it's at. It's being disrespected, but it's not a growth company. They're done innovating. They're done growing. They made a mistake getting rid of Alex Chris. And SoFi, yeah, long SoFi, very favorable. Like Teva said, there could be some chop between now and then, but I think that they're positioned well. They're building in the right direction. So,
yeah, like I think people forget that SoFi is growing like 41%. It's not a small number.
Yeah, people are like, "Is SoFi the next PayPal?" I'm like, "What are you talking about?" Like,
what?
Maybe if you're talking about PayPal like 15 years ago, then yes, kind of.
Yeah. Thomas is asking around Glamsterdam fork for ETH. Look, I think any upgrade for ETH that makes the ecosystem more efficient is obviously good, because that's going to lead to more adoption, and more adoption is going to lead to theoretically a higher price. Although we've not seen that because it's a very cyclical asset type. But whether it's the Glamsterdam, fork or any of these other ones, Fusaka or whatever, like they all are aimed at efficiency, which is good.
Yeah. Yeah, I think it's probably less critical of an update as the Fusaka, also less controversial. It's one of the reasons why you're not seeing a lot of people. It's like, yeah, it's a good thing. And then like next, what's next? And probably the thing that's next is, and we're seeing this with a lot of chains, trying to make it resilient. If quantum computing becomes a reality, how do you secure the blockchain? So there's still some work to be done on that. So yeah, it's a check the box type of thing. Not the biggest deal in the world. I could be wrong on that, but yeah, I think quarter 3 it's coming out, right? Next quarter. Glamsterdam.
Glamsterdam, I don't know. I thought it was July, but I could be.
That's totally quarter 3. So yeah, I don't remember the date. I was thinking next quarter. So yeah.
Yeah, bro, I haven't done BM&R videos in a couple weeks, so people are getting mad. I'm losing subscribers. I actually was like, I'm net down subscribers this week because it's my second week without a BM&R update, and I'm like, oh boy. So I got to make one tomorrow. I don't know how positive I'm going to be on it, but lots of BM&R questions in this chat. So stay tuned for tomorrow, I guess, guys. What's going on with CoreWeave? It's just a rotation, bro.
Yeah. If you want kind of an update, I'll do a data center weekly where I update like the big three, and as well as any other relevant macro news that'll come out, I think, on Sunday. I also did a data center monthly with Nate and also with Jim, and we talked about what's happening in the individual spaces and some of the macro stuff too. So no big news on CoreWeave this week. I think they understand exactly what they need to do, and they're building it in the right way. Market just has some concerns over their debt, which is actually ridiculous, just given the nature of the take-or-pay contracts. It's a misunderstanding that a lot of people have. They're looking at like present revenue versus present debt. That's the wrong way to look at this company. Instead, you need to look at the course of projections, which are like both Prometheus and also CoreWeave. They're very, I think not enough analysts are covering it, and there should be a tighter spread. But the nature of the take-or-pay contracts is it's extremely hard to get out of those type of contracts. It is. Like you see the same thing with Oracle, by the way. Like they have a lot of debt. I do have some concerns with Oracle, but like they have take-or-pay contracts. And so it's pretty much guaranteed revenue, barring like some really strange things that happen. So I wouldn't have much concern with that. I haven't added since Monday, but was it Monday? Was it Friday? Friday. So yeah, I'm down a little bit on CoreWeave. Still long, very excited.
Yeah. Just very quickly here, World Cup, USA or Canada, who goes further? I think USA has a better team overall. So we'll see. Did we talk about Hood? Yes, we did. People unsub, that's a thing. Unfortunately, it is. Opinion on Wolf of Dubai. I mean, like anybody who makes content, I'm happy about. I don't have any further opinions aside from that. I know a lot of BMR people don't like the fact that he's like still shilling and the price is going down, but like people are emotional and recency bias. JP Morgan trash can girl. Yeah, dude, she was a director at JP Morgan making like $250,000, like a DEI director, and she got fired over a trash can that she stole. You didn't see about this?
Yeah, I didn't see that. No.
Dude,
that's crazy.
Yeah.
Why are people so stupid sometimes?
They're incredibly stupid. But was I surprised to find that she was a DI director at JP Morgan? Absolutely freaking not. And like I'm pretty sure I messaged in our group chat. I was just like, of course it was JP Morgan too. Like JP Morgan is assembling a team of like the craziest characters. So yeah. Anyways, let's continue. Are we looking at light? I am not. Are you?
No. I feel like I'm exposed enough in the space, even though they're not a one for one, but with air test systems, just because they have some overlap with the silicon photonics. It actually wouldn't surprise me that they are already doing business with light or will do soon.
Yeah. How can these people reach director level at JP? Dude, you'd be shocked. Like your world is an illusion of what goes on in these big companies. It's just like it's full of like, I mean, think about it, right? They have tens of thousands of employees. Like a lot of them are bound to be stupid. Well, you know what, man? Like I think with this woman, I don't think it was necessarily a sense of stupidity as it was a sense of like gross entitlement. And I kind of like see that role, you know, where it's just you're the person who's determining like social policy or whatever in this big bank, and you're this like hotshot director. Like I could see a super sense of entitlement for her to be like, yeah, trash can with the Knicks colors. Like, let me just dump the trash on the street and then take the trash can home because it's a nice souvenir for me because the rules don't apply to me, right? Like, I could see that attitude being more present than her just like not thinking of the consequences. It's like, it's not like it's not that she's oblivious to the consequences. Is that I think she thought they don't apply to her. But again, this is just me as one dude on the internet judging the story. It's just crazy. Let's continue. Do we have any OUST? I don't even know what this is, Roy.
It's Ouster. They sell like LiDAR. There's a little bit more to it, but basically it's a technology that provides a mapping system for physical, like drones, for in the future, like bots, humanoid robots and everything. And so like I looked up their stock just now. It's doing quite well this year. I don't have any like firm opinions on it. I don't know really enough about the company, just a little bit of what they do. I've been burned by LiDAR plays in the past, so I'm always a little skeptical. But I mean, like you have to have something like this to be able to effectively run your drones and also your robots. We're going to see massive waves in that. So I don't know. I see why people are excited about it. The TAM is immense, and I don't know enough about the individual company to know whether they have a differentiation there. So.
Yeah. Love to have a system. Yeah, they're as unhinged as I look, probably. I'm sure she'll be sorry for getting caught. They always are, man. They're always sorry for getting caught, but never before.
Yeah. Not sorry for what they've done, but what that they got caught. Yeah.
Yeah, exactly. Roy Tevis, love your show. Took profits from Micron, congratulations, and rolled it to Microsoft. 1,000 in Meta, 1,000 in Amazon, 1,100 in Rocket Lab. All right, risky investor, can you adopt me? Because these are some big positions. 100 in Google, 2,000 in VG. Please let me know. Your feedback will be appreciated. I love that account. You know, Microsoft, Meta, Amazon, Google, like staples, and then you have Rocket Lab and VG as like your, wilder bets, let's say, your moonshot.
Well,
like
I wouldn't say VG's a moonshot. I think it's it's probably going to. I mean, I don't see any way it doesn't compound over the next 5 to 10 years. As long as you have long time horizons, I think that you've got some winners. Some might underperform and some might surprise you to the downside. But yeah, that's a great bet if you're long term and if it's not money that you need to lock up. Like Tevis said, like it's Mag 7, so that feels really safe here. Rocket Lab, it could go lower. It's going to be very volatile, but if you're looking out 10 years, it's probably quite a bit higher. VG likewise. Very nice.
Yeah, great portfolio. I think it'll treat you very well. Dennis, what's your DGen play for next week? I don't know, man. A lot of my plays are DGen play. I did spreads. Oh, dude. Okay, let me tell you about this because you don't even know, Roy. Hold on. Let me actually go to my spreadsheet here. So I'm not going to share the spreadsheet, obviously, but I want to get the facts straight here. So I was just like, I'm okay to take some profits on Nebius. And what I did was I wrote, so on June 25th, whatever that was, yesterday, I wrote covered calls for Nebius for 280. Okay. Nebius was trading for 265 when I wrote them because I have this written down here. So $15 away for 1 day to expiry. Roy, what do you think I got on those covered calls? $15 away, 1 day out.
I have no idea. What'd you get?
$4.
That's insane.
So that was pretty much my DGen play. I was like, look, instead of just selling on the open market, I'm just going to write these covered calls and I want to sell it at 280. And if it gets called away, it gets called away and I can sell. Dude, $4.
Yeah, for a day.
For a day.
Not at the money, but yeah, that's actually really insane.
Like, what? I was like, I got to do this more often. Anyways, and then I also wrote spreads. Or sorry, not spreads. I wrote a strangle. So I sold cash secured puts on Nebius for July 31st at 160. And I collected about $4 or $3. And I sold covered calls for Nebius at 440 for a month out. And I collected, I think, $3 or $4.
That's
and
awesome.
So it's just like in the next month, 30 days out, 33 days out or whatever, if Nebius stays between 440 and 160, I profit on those plays. Just this thing is just like a money printer from an options perspective. So that's what I would say is my degen play of the week. Heinze, we're going to talk about BM&R. I promise it's coming up. Lots of people asked about it. First of all, breaking news. Trump admin struck a deal with Anthropic, which grants the company permission to release Mythos 5 to a group of 100 companies and federal agencies. Roy, what do you think? We're getting a very two-tiered system here.
This is actually really beneficial to Palantir. You may not realize it on the surface, but when it mentions federal agencies, that's probably the majority of it, but also some other companies as well. And one thing that Palantir really excels with is governance, making sure that only authorized users are able to access authorized systems. And they do a great job with the KYC stuff. They have deep ties with the U.S. government, and probably most of the companies that have been checkmarked for being, good. So I would expect, that's going to be a really good position for Palantir. But yeah, no, it's a good thing for the market overall. I'm glad that, these companies and agencies can use it. It's supposed to be incredibly powerful. Probably some of it's a little bit hype, but there's something to it. We've seen some, like things with the NSA that were really interesting as it played out. So that's good. It's very good.
Why do they have Gemini 3.5 Flash instead of Gemini Pro on that list? I don't even know what this question is. So I'm just going to skip it. Probably something that we were sharing, but yeah. Can you guys get into the BTM deal that Microsoft did and cover companies like EQT and other pipeline companies? Do you know this deal?
No.
I don't know it either.
BTM deal. Seeing if anything.
Oh, it was in the list of models and their prices in the CNBC at the start of the stream. Got it. Yeah, I think it was just to showcase the price because it's probably one of the cheaper ones. Yeah, sorry, we're gonna skip this question because I have no idea what this is about. We haven't seen that news. What's the realistic risk of BM&R at 13? Is it 90% of the risk already realized, especially after control is essentially switching from EF to BM&R? Well, aside to Ethereum, right? ETH is like what, 1,500 right now. So if you think ETH can go to levels below that, then BM&R can go to under $13. Is 90% of the risk already, baked in? Like, yeah, you're buying it at crypto winter right now, essentially. And if you think there's upside for ETH, then you can buy BM&R easily.
I have a video from December that's aged very well so far, where I predicted, it was entitled something like, what's the lowest that BM&R could go? My prediction was Ethereum to 1,500 over crypto winter, which we weren't sure if it had started yet or not, and BM&R to a $10 to $12 range. It's based on historical MNAV compression that happens in winter cycles. Not with a great read, but it was from Strategy. There was a lot of information in that and a lot of stuff behind that as well. So it pleasantly surprised me that when Ethereum was trading at 1,500, that we didn't see BM&R lower. Now we're seeing that fall down, and I think I said even with an updated video where I kind of reviewed that, I was like, hey, I think Ethereum might have had the bottom be in, but BM&R maybe not. And so that seems like it's the reality that we're playing out. I do want to caution on the other side. I still hold BM&R. I still think that there's upside here. But when crypto winter, when we hit the bottom, it doesn't mean that all of a sudden we go back up to the all-time high in 3 months. That's not usually how these cycles play out, although it's the crypto winter rallies are usually pretty fun if it's more than a rally, especially. So, we could go lower, but I would have a hard time seeing it go much below 10. Things would really have to collapse with Ethereum's price, and I just don't see that. So, if you're looking at it from here and looking at long term and saying, hey, there's 30% downside versus whatever the upside is, depending on your time horizons and risk tolerance, it might be a good opportunity for you. Myself, I think that I'm probably going to wait a little bit more towards the maybe late August and September timeframe to really start stacking in crypto names, including BM&R. And it might be at a higher price, and I'm okay with that.
Yeah. Yeah, I agree with this as well. Like the sentiment is so brutal right now.
Did you see? Are you familiar with STRC?
Yep, that's they pay the dividend, right?
Yeah. So it's basically what Sailor has been using largely for being able to raise, and so the par rate is 100, and you can see for most of the time it's traded there. Right now,
Wait, what?
it's
Why?
trading. I don't really fully understand it. I had a article that I posted on Artemis from a couple of weeks ago where I kind of go into some of the details on it, and it's convoluted, but largely when you see a drop like this that is this pronounced, there's probably other things going on as well. Some have concerns, which actually is incorrect, that they're going to reset the dividend rate. Now, the way, since this is a preferred equity, you can't just say, well, we're just going to change the dividend no matter what. They can pause the dividend, and that's written into the governance of this offering. But all that does is it doesn't mean that you're not paying out the dividend. You're just delaying the payout itself. I think beyond that, like just people are worried about that par redemption rate and everything. And there are some concerns as Bitcoin continues to not do quite well. And that I think that sell was probably the catalyst, that really small sell by Michael Saylor, which was not really material. It was a little bit silly, the reason for it, but it shook a lot of people. And I think BM&R, by the way, would fall into the same consternation if Tom Lee starts selling. You'd have to see a tremendous disconnect between the MNAV and the underlying for that to even really be appealing, because otherwise you're going to crash the stock. But it's astonishing, especially given, Webull actually displays it really quite well. The dividend rate on that, because it is a preferred dividend, is just so ridiculous right now. It doesn't tempt me just because I'm like, I don't understand what's happening here, and I don't go into things that I don't understand. But yeah, the dividend yield is 33.41%, Tevis. Now, that sounds appealing. It sounds attractive, and it probably is.
Because it fell so much? Is that why?
Yeah. But yeah, it's partly because it fell so much, partly because they raised the dividend rate just to try to keep the par rate up, and that failed utterly. And so what this does is basically it makes it so that they are unable to actually fundraise effectively. They can't with this. I mean, what are they going to do? That's a problem.
Yeah. Let's stick with this question. Why can't Tom Lee buy back shares at this MNAV? The comments on X posts are filled with pitchforks. Where's he going to get the money, dude? Like, he can use the cash on hand, but what? Is he going to sell Ethereum to buy back shares? That's going to drop BM&R way below the MNAV again because of sentiment, right? If he sells Ethereum, then it's like it breaks that idea that he'll never sell Ethereum. And Ethereum's really the only place he can get the money, or he can dilute, but he can't dilute to buy back shares. Like, that doesn't make sense, right? So that's the dilemma that he's in. Yeah, I mean, he can sell the long shots, I guess, but like, I don't know. I would have a tough time believing that he's going to do that to buy back shares. Like, it's not like the long shots are long shots because they can 10x, 100x, whatever. Yeah. Okay, let's continue. CapEx could push down the pricing powers of companies like Micron. Oh, cutting CapEx. Probably not in the near future. Like, Micron's CEO said, like, okay, hold on, let me throw up that quote because I think it's interesting. He said, with respect to supply, let me share my screen. This is Micron's CEO just a couple days ago. He said, with respect to supply, our customers are recognizing that supply shortages in memory and storage will take considerable time to improve, even as we expect industry supply to improve gradually in 2028. We currently do not have line of sight as to when the memory supply will be able to catch up with increasing demand. So that should tell you everything you need to know, that this is not something that's going to happen in the immediate short term. Like, this is going to be several years for this to go to more of a balanced equilibrium. And by several years from now, I mean, I think I mentioned this in the last show, it's, well, that CapEx that they're spending right now should show some realistic ROI, right? And these companies will be measured by the ROI that CapEx will show. So I don't think it's too big of a concern right now because they're booked for the foreseeable future.
Yeah.
I bought ServiceNow after a sizable run up. Meta or now at these levels. Yeah, I mean, like I sold a cash secured put on Meta at like $610. So, but for September. So we'll see if Meta is above 610 by September. But I think both are pretty good. Meta's like 12% of my portfolio, something like that. I wouldn't be against buying more if that cash secured put got hit and I suddenly own another 100 shares of Meta. Like I'm not going to be, sad about it. But I think ServiceNow is really interesting as well. And like I know more about Meta than I know about ServiceNow, so like the position is bigger. But I think they're both going to do very well. Roy, this next one's for you. NSA plus Palantir is a gatekeeper for next available models?
I hope not, but I mean, that may be the direction that we're heading. Like as a shareholder, awesome, amazing. But as lowercase L libertarian, yikes. And it will feed the narrative, which isn't great also, that Palantir is Big Brother watching it. Like it's not, but if the government's using it that way, not to spy on citizens, they can't do that, and it's illegal, and they don't have the technology anyway for Palantir. But like for model availability and who has access, like that it's an ugly thing. It's an ugly look. What I'm saying basically earlier with my Palantir comments and that deal with Fable Mythos rather, is that they are very good to make sure that the technology is only used by those who are authorized to use it. Like very good. They built their reputation around that. And I don't think that there's anyone that's close, nor do many have the IL6 certifications that I'm guessing some of these agencies require for their security clearance to be able to offer anything. So yeah, deep moat that just gets deeper with all the AI stuff. It just does.
Yeah. What's the next major catalyst for CoreWeave and Nebius? I mean, earnings or guidance or another big contract?
Yeah. There was a actually fascinating post. Let me see if I bookmarked it on. So they had a capital raise a couple of weeks ago, and when you do that, basically you have to issue a bunch of public documents which infer things about what your run rates are, for instance, what your backlog looks like. I can't find it. It's on X. I'm not sure if I retweeted it or not. Anyway, it's just in the Q&A period. They're going to smash expectations as far as what they've actually sold and what that revenue ramp looks like. Nebius probably will too, but yeah, CoreWeave, we had a lot of insight on that from those documents that were written, that came out around that underwriting time. So that's a catalyst. With earnings, we'll see it.
Yeah. What's happening with BM&R? I mean, it's going down. I don't know. ETH is going down, so BM&R is going down. Are we buying? Not really. I remember like 2 weeks ago, I got so much crap from the community around selling like a third of my BM&R position. And they were like, how dare you, blah, blah. And it was like $19 or something, $18. Now it's at 13. And yeah, it got real quiet. But yeah, like the same thing holds. Like if ETH goes up, BM&R goes up. Do you think deflation will kill banks like SoFi? I don't think anything's like any one single thing is going to kill SoFi.
Deflation.
Yeah. As in like things get more efficient and technology, like AI is deflationary over time is how I'm assuming.
Okay, so I know it's Q&A period, but there are two very different kinds of deflation. And it's also important to note, like you're not confused, but it's different than disinflation. So what this question is about is inflation reversing, so deflation. The reason for that, go back to Kathy Wood's comments back in 2021. I think she's right, but it was like way, way early. And typical Kathy Wood, right? Deflation in a lot of spaces and sectors will come over time, partly because of robotics, partly because of AI. We're a ways away from that, and it does take a time to play out. Unhealthy deflation. So healthy deflation is when it's on the back of technology and efficiency gains and improvements. Dude, that's a great thing. Consumers do very well. And in the environment where consumers are doing very well in the face of that kind of deflation, banks also do very well, and they're in a very healthy spot. Unhealthy deflation is when people are not wanting to spend money because they're like, hey, we're afraid what the future looks like, and we have fears. Now, could we see that play out with the AI wave and then robotics coming behind it and job security? Possibly, yes. But I'm assuming you're meaning largely healthy deflation through real efficiency gains that's delivered by the market. That's a great place for banks.
Yeah, either way, the answer is no. It's not going to kill them.
Or just say no, like this guy.
Yeah, just cutting it short. It's not going to kill them.
Yeah.
But this is why he's a doctor and I'm a degen. So there you go. Did we see Chime volume today? No. Did you?
Yeah, I just pulled it up. It's up 11%.
That's cool.
Lots of volume. 16 million. No, billion. Whatever. There might be some individual news. I don't really follow the name. I think Tanner does, but it's running like everything else that's in fintech right now. We'll see if the rotation is real. It might just be a relief rally, but yeah.
You say 16 billion?
16 million.
Million.
Yeah, I think.
Okay.
Well, let me just pull up one of these apps here. It's easier.
Because like the entire market cap is like 8 billion. Like,
volume, I don't think is 22 million today.
Yeah, okay, that sounds like. I thought you said 16 billion. I was like, what?
It's a nice volume spike. I know it's probably hard to see, but you can see the volume spike in the bottom there. So
yeah.
Like really nice.
All right, let's keep going. Really doing grow math. Yeah, dude, I thought he said 16 billion. I was like, what? It's like the entire market cap is 8. How is that possible? Like everybody traded shares multiple times. Do you see do you guys see in upcoming months Mag 7 cutting CapEx a bit down?
Probably they'll reduce the rate of acceleration in CapEx. Maybe even just keep it flat, although I don't think that they will. I don't see them like saying, you know what, we're actually not going to spend that much. The demand is there.
Yeah. I'm not sure. I could see it. I could definitely see actually them cutting CapEx, but I don't think they're all going to cut it CapEx. I don't know, man. It's interesting, right? Because like they're funding it through debt, and then they're like raising prices, and yeah, it could happen for sure. How do you have so much money to buy and invest? Do you not buy every month and save? How can I stack up like you? Yeah. I mean, like I think some of it is just like rotating capital into other places. The other part is like options selling. So like I'll sell options for like a month, 2 months, whatever. And then I'll allocate that capital. But I think for me, like, and I'll pair it with this question as well. Like, I want to get to a point where I'm trimming some of my Nebius. Nebius is like 45% of my portfolio, and it's kind of getting completely unruly. And so I want to trim that down to maybe still keep it as my number one position, but like maybe trim it down to like 30% of my portfolio. And so some of it is just letting go of some of the Nebius shares that I have through covered calls, or even just flat out selling some and reallocating that capital into some names that I think are undervalued. So it's not necessarily that like, oh, I'm buying stuff because I just had like 130 grand just lying around. Some of it is margin. Some of it is premiums, and then some of it is just like I'm just selling other stuff. So I don't want people to get like, I definitely am not keeping just 100 grand just lying around just in case Amazon's down. It's not the case.
Yeah.
Are we selling covered calls on SoFi? I do have them on SoFi. Do you, Roy?
No, I've not been recently. The premiums are just terrible. So I'd have to sell on multiple weeks. And when you have a stock compress this much that the company's doing great, it's either through earnings to get some premium, and I'd rather not do that. I'd rather wait till the week before to sell some just for a little tiny premium. But I'd honestly rather not cap my upside right now. I think it's undervalued, and I don't want to like sell at 22 and then be really upset with myself.
Yeah, I have some covered calls for 24 for July 31st. So if we go to 24, it's not on the whole position. It's like on a quarter of the position. Similar to Roy, like the premiums are just so bad on SoFi that it's not worth it in large part. But at the same time, on this portion of the position, I'm like, if I free up that capital, I free up that capital. That's fine. There for July 31st. Are we interested in SpaceX? If so, at what price, Roy?
Lower, probably around maybe 900 billion market cap. I'd be interested depending on what other opportunities are out there. I don't know that the market will give us that. That's a lot of downside between now and then. I'll just hold on to my 3 shares for fun.
Yeah, I'm not really interested in SpaceX right now. I think there's a lot of opportunities, and maybe if SpaceX goes under 100, like I'll start looking at it more, but not really right now. Can we get an updated portfolio? Yeah, when we hit July 1st, I'll put a note to do an updated portfolio. But yeah, like over the next couple of days, I definitely want to reduce Nebius and then rotate some capital into like buying some more ServiceNow, buying some more Amazon, buying some more Meta, and yeah, go from there. I've asked before about Hive. There's been some great news and delusion with stock price rebounding. It's a Canadian company, so I thought it might be on Tevis's radar. No, I think if I had invested in Canadian companies, I would be massively underperforming the market right now. So I don't know about Hive. I know that either you or other people have mentioned it in previous podcasts, and I've said I'd looked at it. I haven't done that. So
yeah,
sorry.
I've not looked at it in a while. The one Canadian company that's doing incredibly well is Accelera. I'm no longer a shareholder. Kind of wish I was, because I just looked at it. It's up to $7.38, and I think I initially bought it at $2. So go Canada. I think biotech might actually be seeing a legitimate rotation. By the way, it's not something that I really follow closely, but there are a lot of signs and indicators that that's very much for real, and there are also secular factors that are helping to drive that. So, not the question. So,
yep. Okay. Yeah. Canadian companies are no bueno, better companies in US. Agreed. It's just a bigger market, guys. It's not like I have something against Canada or their deflating currency or their restrictions or their government policies or their taxation or just the lower quality of life overall. It's just that the US is a bigger market.
Better hockey team too.
Sure. Yeah.
Sorry, I couldn't.
Just pile on, Roy. I hope Noto doesn't have puts on SoFi. Yeah, and I mean, Noto's been buying quite a bit of SoFi, so I don't think so.
Yeah.
Anyone thinking of buying Bloom Energy here? Down 18% today. Wow, really? On Monday, it was trading for 350. Now it's at 252.
Was there a reason for the move, or was it just macro? That's a big move. I know it's very volatile, but
dude, it's like back-to-back huge red candles.
That's usually so I would say no for me, but I mean, if it keeps falling, it's definitely something to keep an eye on. With massive moves like that, like if there's a catalyst, make sure you understand what's going on, whether it has merit or not. And then oftentimes there's a 3-day rule when you see something like this, which others, not necessarily retail, follow, which is just you wait 3 days before you buy after a massive dip. And so you might see some relief here relatively soon, but there's no guarantee. So yeah, that's a lot. I pulled it up real quick. I didn't see any individual newsworthy things that are driving it, so it's interesting. Yeah, it's probably just similar to like what happened with Micron, just really good numbers, but people want to take profit and de-risk. But I don't know.
Yeah. I don't know, man. It still seems like pretty expensive, like $72 billion. Anyways. Sushi says Bloom is overvalued, but could have incredible growth. Things to watch are backup generator option backlogs. Those backlogs help Bloom Energy. Great Canadian dividend companies, not so much for growth. Yeah. Sounds like Tevis is soon to be a resident in the US. Yeah, man, like if I could get papers, I would move tomorrow, but I can't get papers. So I'm probably going to go to Europe instead.
It's our loss.
Well, it's Canada's loss, but yeah, your opportunity cost for sure. Let's continue here. Houston meetup soon, Roy?
I do need to think about that. So initially, I think Amit was going to do one, and that was canceled or in Austin. So in Houston, there's enough investors here, and of course Matt Money's here. So maybe in our next lunch, we need to talk about that. Maybe fourth quarter or first quarter, depending on what's happening in our lives. So yeah, it'd be good. There's good food, and Tevis might come down for it. So if I promise him fajitas.
Yes, I definitely need to make my way down. Hopefully soon. You're coming to the Toronto meetup, right? Or no? I forget.
Probably not. Yeah, I was leaning that way, and you know the news I shared with you, so that's probably not. Yeah.
Okay.
I would love to have, but yeah.
What is the ROI of AI CapEx for the mags? We only use ChatGPT and Claude. Yeah, I don't think we know the full extent of the ROI for the mags yet. Like, still TBD. I think that's what the ambiguity is in the market. That's reflected in the price for a lot of the mags right now.
And that's one of the reasons why I think a big part of an investing thesis should be leadership. If it's a leadership that you followed and you're like, hey, they've executed well, they're leaders in the space, they know what they're doing. It's easier when you're like, hey, it's uncertain, but they did something that I don't fully understand. It's a lot easier to trust that versus like you've never taken the time to look in the leadership at all, so you don't know whether they can be trusted.
Mm-hmm. Yeah, I see a lot of you guys suggesting the marriage option for me becoming a U.S. citizen. I think that's easier said than done, guys, because I wouldn't want to do it just for the papers. But yeah, that is one of the options for sure.
I mean, I got a couple of older sisters that,
yeah, younger ones, like.
Sorry, no. Fresh out.
Yeah, Canada does have a freaking brutal exit tax that they try to keep you locked. That's the best part, hey? Like your country is so good that they try to make it harder for you to leave that country. That's how you know it's good.
Yeah. Just like Cuba.
Yeah. Get a Russian wife. I don't think that helps me for the States, bro. Buy it for $1 million. I'm too busy buying ServiceNow and Amazon. So Noto's Otter, yeah, I mean, I'm not going to comment on that. Out of respect for Anthony Noto. Can Roy adopt me? I am kind of old for that. So maybe not. But Uh, let's see. Dr. Roy, how are you feeling about CoreWeave currently?
Yeah, I mean, like the only thing that's changed is the momentum in the stock. There's no long term challenges or difficulties. I think it's misunderstood as far as the danger there. So very bullish. Lots of CoreWeave updates coming out. And I think the earnings. Look for the post that I alluded to earlier. It was Cantor Fitzgerald, I think, the analyst that basically broke down the numbers from the underwriting. Dude, like it's gonna smash expectations in the earnings. That doesn't mean the stock's gonna fly. You can see ridiculous beats and a sell-off, but man, they're well ahead.
Yeah. Yeah, illegal migrant way. I don't know, man. Not a great climber. That's maybe. I appreciate the format here and both of your solo videos. Thank you so much for the $10.
Yeah, thank you. I really appreciate that. That's kind of you.
Let's see. Jeff Booth moved out of Canada for a reason. Yeah. The US has exit taxes too. Yes, they sure do. But the US, you also have 50 states. So you have way more flexibility in terms of what amount of taxes that you pay. Versus in Canada, it's not that easy. If you don't pay the extra tax, well, they extradite you to where? So the exit tax is basically like they sell all of your assets and you just pay capital gains, which makes sense. Like that makes sense, except for the fact that like if you have a business, let's say, and the business has let's say I have a business and I do consulting. Like get this right. This is a crazy example, right? I have a business and I do consulting and I work with clients, and if you earn money through that business, then what the government does is instead of it saying like, hey, what is your business? It's just you offering services through your, experience. They don't do that. They say, no. This business is a multiple based on the revenue that it earns, forgetting the fact that if I decide to never work again, then that business revenue goes to zero. But they say like, okay, if you're earning, I don't know, let's say 200K a year, they'll assign a 10x multiple and the business is worth $2 million. To who? I have no freaking idea to who. But when you're leaving, then it's like, okay, cool. You have to now pay capital gains on this business that's worth like $2 million. And you might end up like paying this amount that is just completely ridiculous in a business that like no real market would assess this business at that valuation, because it's not like publicly traded or anything like that. It's just like, anyways, it's a whole thing. The point is like, it's incredibly difficult in those cases, but in many accounts, they're like tax haven accounts, in which case deemed disposition or the exit tax, as you call it, is not really applicable. Anyways, that's like a whole diatribe that you guys didn't sign up for, so I will continue. Thoughts on Oklo or Celsius?
I mean, Oklo is like so pre-revenue that it's hard, but they're in the right space. I don't know enough about the individual company. Celsius is a commodity, and I'd rather not invest in commodities, at least once they become commodities.
Have we looked into Corning?
Not really. Not enough. I know Amit has initiated a position on that, and he's done some deep dives on it as well. The little bit that I looked, it looked interesting, but I don't know enough. So, have you looked into it at all?
Not really. I know NVIDIA invested money into them, but other than that, I don't know too much.
Yeah, it's related to what's happening with Silicon Photonics, and what's happening in that space is real, but usually the market gets a little too excited on the front end of these growth stories. So we'll see. But yeah, it's kind of like, at least with Corning and also with Light, the earlier question, like in Air Test Systems, they're they're not silicon photonics, but they do automated testing equipment in that space. So I feel like I already have exposure. So yeah.
All right. I'm not going to be bookmarking any more questions, guys, because like we're at the 2-hour mark and we have a couple of questions to go. So I'm just going to try to get through those and then we'll call it. So I apologize for you guys who are still asking questions. We do a show on Monday as well, so you can definitely join that instead. But let me just get through the questions that I already have bookmarked. Do we own Zeta?
No.
We don't. Are we buying Micron if it has a sell-off?
Maybe,
Depends on how
yeah.
big of a sell-off. Yeah, I don't think so, because we were talking about Micron when it was at 700, and like we weren't really buying it there. But what about Nvidia at these levels? That's way more compelling. I think it's at 190-ish, Roy.
Yeah, it actually plummeted at the last little bit of the market, the last 10 minutes. I'm not quite sure why. Yeah, fell $3 in like 10 minutes. That's pretty big. Yeah, it's undervalued, underappreciated, unloved. Probably the next thing I'll do in Nvidia is buy Leaps. I've not done that yet. But if this sell-off continues, the hard thing is like there's a lot of opportunities in the market. Like CoreWeave is one of those, which I see a question on. So there's plays where I'm like, hey, I'd love to buy at this level. Well, unlike Tevis, I only have so much money. So usually if I do a massive buy, there are a couple times a year that I have some money coming in the market, so like a good chunk. But most of the time it's I either have capital from something that sold or I need to sell something and do some rotation. So I'm definitely not opposed to it. I do want to add. I'll probably just nibble on shares a little bit here, but yeah, Leaps are probably looking pretty attractive right now.
I mean, you already have some, so but yeah.
Well, you're right. I have one Leap singular. So I like in my mind, I'm like I don't even count that. That's like nothing. But yeah.
Are you guys looking at any stocks to start new positions on? I started one today. It's called ServiceNow. I talked about it at the 49-minute mark. So you can rewind and you can hear the whole rationale for that.
Yeah, largely there's a lot of names in my portfolio that I want to add to. So I prefer to concentrate on that rather than the next shiny object. But there are some shiny objects out there that interest me. So I'm not opposed. I'm doing some research on some. Like, okay, so just because you guys stuck around here, I'll show you the one that I'm intrigued by.
Oh.
And yeah, I think, I know I've mentioned this elsewhere too, but it's Fly Aerospace. And I think it's one of you guys that mentioned this when we were talking about SpaceX and space coverage. It is in the space of defense technology. There's some government stuff. There's launch vehicles. What's interesting is, well, okay, so obviously it's incredibly volatile. If we look at the actual financials, it's like, it's pretty cool, but it's such a small number. But I mean, total revenue percent change, lots of revenue growth. They're not profitable, which is not a surprise. Like pretty much everybody that's in this space is not profitable. But if we look at the modeling, and there's some reasons for this. This is a tremendous ramp that's happening. I don't own a position yet. I'm doing some due diligence on it right now because, again, whereas when SpaceX entered the market, there was a strong inverse correlation. And so when it did well, the other names did, and vice versa. I think we're past that point, and SpaceX is pricey, so it could weigh, especially if the market is in a de-risking appetite on this. I'm not trying to get too cute with it. I just... I don't have a lot of money on the sidelines, so I'd have to sell something to get a position. But this, it shouldn't have been up there probably, but I think it's pretty attractive here. I'm very interested. If I had to pick something and was forced today to start a position, it would be in this company right now.
Yeah. Thoughts on position size for CoreWeave? How are you playing it?
So I've been pretty sick since Wednesday. So off the top of my head, I think I'm at 10 or 11%, which is about my full weighting. I'm not opposed to getting some leaps at some point, just to put in the swing portfolio. But
Yeah.
I'm pretty much maxed out on CoreWeave of what I will allow myself to buy for a company that I think is very good, but not a generational. I try not to use that word too many times. So, it's just shares, common shares. And the beautiful thing about that is you got time on your side as retail if you don't need the money. So,
yeah. Okay, and the last question on our list here. Again, apologize to everybody asking questions. We're not taking any more. We're already over our time allotted. But we will be back on Monday, so you can ask them then. Is Europe that much better than Canada? I guess it depends on the country, but taxes are still high in Europe. Yeah, look, I don't think it's like a tax optimization for me to move to Europe. It's more of a quality of life optimization. Then you just figure out everything else. But like the quality of life is much better because people actually, first of all, it's more affordable in general, life, regardless of taxes. And second of all, like people actually enjoy life here a lot more versus in Canada. It's like all about work and people don't talk to each other and it's like kind of cold. So yeah, that's more around the rationale. Anyways, shall we wrap up there, Roy? What do you think?
Yeah, like one last comment. I did see somebody say that they don't like Firefly's leadership. That's the next piece of DD that I'm doing. I don't know that at all. So I was already planning to look at that. But yeah, your comment is like just a reminder, which is also why I've not started positioning. I'm not. Now, my normal thing with new positions is invest and investigate. Right now, there's so many other opportunities. I'm fine just kind of keeping an eyeball on this one. But yeah, not ready to buy. If I had to buy and start a new position, that's all I say. So yeah, thank you guys. It's been fun. You guys make it a lot of fun, especially with the Q&A comments. We really thank you for the support. And if you haven't already, if you're on my channel and you don't follow Tevis, you need to remedy and repent and start following him immediately. You can see his handles right there. If you're on Tevis's channel and you would like my style or whatever, feel free to subscribe or just watch the occasional video. But thank you guys.
Thanks again. See you Monday. Goodbye.